All right, hello everyone. It's Tim Davis coming to you guys with another market review. I'm going to start this weekend by taking a look at the VIX, and what you're looking at now is a VIX daily chart. And I'd like to point out the action we are seeing in the VIX. So the action we are seeing in the VIX is that the VIX has finally started the next leg up, and you can see that clearly by looking at this uptrend that the VIX has started to form right around the middle towards the end of August. Nice little uptrend, and the VIX is starting to, the VIX is starting to form, and now back above his 50-day moving average. And on this past Friday, the VIX gapped up. Pulled back, and then it quickly regained all of its strength gained all of its strength, as you can see within this long wick candle we have here, a little short body and a little short top upper wick. Secondly, the bulls are really fighting within the VIX to push price action much higher. So I do expect that this up rally in the VIX will more than likely continue, and I still have my upper target in place. I'm looking for the VIX to pop above 40, possibly between now and the end of the year. So keep an eye on that as a really strong possibility at this point, with the VIX starting to start a new uptrend. Got a nice little bounce off the lows back around towards the middle of August, and then it started to trend higher. And then we're back above its 50-day moving average. So the VIX is in a new uptrend. What does that mean for our markets? Let's hop right to the S&P 500. Wouldn't you know, S&P 500, perfect setup, hitting an area of resistance and doing what it do, reversing in price action. So we hit the level of resistance and we reverse in price action, pushing price action back down below its 50-day moving average. Now the 50-day moving average is going to act as a role reversal, meaning it will start to act as a level of resistance as price action continues to trend lower. And nothing goes down in a straight line. So again, we'll start to see a zigzag lower more than likely. We'll see moves sort of like this. And that's what I expect to start seeing within all the major indices. As you can see, you look at the what the markets did on last week. Big dipper over the course of last week, back down to oversold territory. Right now, RSI has a reading of about 23. So I would not be surprised. And next week is a shortened trading week because of the holiday on Monday. So sometime next week, would not be surprised to see the VIX. See the S&P have a little bounce, get a little bouncy action going on. But this role reversal pattern where it is going to start to run into the 50-day moving average is probably going to act as a strong area of resistance. So we make a little bounce, see the RSI get back above 30 possibly, and then possibly see price action challenge this 50-day moving average and then possibly fail. I think ultimately we're going to take out June lows probably sometime in the month of September. That's something to keep in mind and something to watch out for. And if we take a look at a weekly chart of the S&P, look at that. It's even more defined as far as the reversal in trend action. We hit the pivot point there and we reverse in price action. We hit it here, which was back in March, reversed in price action. Then we hit the lows, ultimate lows, right around the middle of June. Then we got that nice little burst bear market rally back above the 50-day moving average, but look where to, right back to a level of resistance, and got the perfect pivot point right there. And we saw the reverse in action. This is on the weekly chart. So the weekly chart takes precedence over the daily chart at this point. And as you can see, it looks like we're in free fall. So while we might see a little bounce next week, I think ultimately over the next couple of weeks, we're going to see price action on the weekly chart continue to trickle lower. And I think we have a strong possibility that this next leg down is the next cycle in this bear market, the next leg down in this overall bear market. And this should take out these June lows eventually over the next couple of weeks. It's not going to happen overnight, but I think over the next couple of weeks, every time we see a little short rally, it's going to probably get sold off really quickly, as the weekly chart is still starting to just pick up steam on a weekly chart. And if we look at the TTM squeeze, don't even have any red bars yet on the weekly chart, which I think will start to form. RSI is definitely starting to point down on the weekly chart. So this momentum to the downside, the weekly chart should probably going to show a lot of pressure over the next several weeks, more than likely. Now, let's switch over to, let's take a look at the NASDAQ. I think the tech stocks probably going to also show a lot of pressure, considering the way things are starting to unfold. Again, same type of scenario. It actually hit the pivot point right at the trend line, also right at the 50-day moving average, and starting to reverse on the weekly chart. Pull up a daily chart on the NASDAQ. Look at this big red candle, almost an engulfing red candle. Price action is definitely in oversold territory in the near term on the daily chart. So I wouldn't be surprised to see somebody with a little bounce. Again, roll reversal after price action crossed below the 50-day moving average. 50-day should act as an area of resistance. So as price action continues to trade below this 50-day moving average, we could see a little bounce up to the 50-day and then coming right back down, eventually taking out this low that we've seen in June. Again, that may take several weeks for it to happen, but I think eventually that's where we are set up and in the store for. And taking a look at the Dow Jones, same scenario. Again, definitely an oversold territory by paying attention to the RSI. So again, I would not be surprised to see some type of short-term rally in the market sometime next week, and then right back down. And the Dow Jones is much closer to its June lows, so we could see that happen very soon. And take a look at the Russell. It's even closer to its June lows, so, and closer to pivot point. So we could again, RSI is oversold on the daily chart. We can see a little short-term rally and then right back down. Because again, if you look at the weekly charts are definitely starting to roll over. One thing to note is that we are getting ever so close on all the major indices, ever so close to the ultimate pivot point that we've seen in 2020 when prices hit a ceiling and reverse. We are getting ever so close to breaking back below that ceiling that we hit in 2020 and start to see price action head back down towards the lows of 2020. So we are getting very close. So once price action starts to break the June lows, we could really start to see an acceleration to the downside, folks. So that's something to pay close attention to as we head into the end of this year, because once we break that level that we've seen, once we break back below these, if we break back below these June lows, we're going to start to see price probably really start to accelerate towards the downside as we start to head towards the lows that we've seen in 2020. So that's something to really pay close attention to. All right, let's take a look at the SPXA 200R, which is the tool that tracks the percentage of S&P 500 companies trading above their 200-day moving average. And as you can see, same type of scenario, hit that pivot point and reverse quickly and in a hurry. Nice little rally off the lows, pivot point, and look at this weekly charts. It's like they're in free fall, heading back towards the bottom. And again, if you've been following me for a while, I told you eventually, I think we're going to see the percentages of S&P 500 companies trading above their 200-day moving average probably head towards zero eventually, but when it's all said and done. Same thing that happened in 2020, headed towards zero. And if I back this out even further, you'll see it's the same thing that happened in 2008. So the pain is just beginning. I mean, the pain is nowhere near over, folks. And these bear market rallies are going to seem like things are over, and then all of a sudden, the bottom's going to continue to fall out until we see capitulation in the market, and that will happen eventually as we get towards the end of this bear market. But I think we're going to be in this bear market for a minute, so just batten down the hatches and just hold on tight and trade accordingly. Don't get stuck holding the bag. Now let's take a look. Excuse me. Let's take a look at a daily chart of crude oil. Because with crude oil, I think it's just the opposite. So crude oil, they're trying to bounce off this bottom. As you can see, we are at a hanging around a pivot point on crude oil. So we got a little push up on last week, and then we came right back down. But where to? Still settling right around a level of support for crude. I think eventually crude will find a way to continue to move higher and possibly break back above this 50-day moving average on a daily chart. Look at a weekly chart of crude, again, hanging around oversold territory, right back at a level of support. So next week is going to be a telltale sign for crude. If crude is really going to start to reverse here, it has to get a nice bounce off of this level of support and pop back above its 50-day moving average and stay above it. So we'll see how that pans out as we go through next week. And that could be the best buying, best bullish opportunity that's hanging around right now is possibly crude oil. So we'll see how that pans out. All right, folks, that's all I really had to offer you guys. Again, we are still in a bear market, and I don't think this bear market is nowhere near its end. So keep that in mind. Pay attention to the longer-term charts, because the longer-term charts right now is what you really need to focus on. You don't want to get stuck holding the bag. Here is a monthly chart of the S&P. And here's what I'm talking about, folks. As we go through this bear market, we're starting to see some dark red bars on a monthly chart starting to show up on the TTM squeeze. I think we're going to see I think we're going to see prices head much lower, folks, over the next 6 months or so. So next 6 months to a year. I think this bear market is just getting heated. Once price action falls below its 50-day moving average on a monthly chart, all bets are off. We could really start to see acceleration to the downside. So again, can't stress enough highlighting the pivot point in stocks in 2020 when we had the ultimate reversal in price action, when we screamed lower and continue to rally. I think we're eventually going to break this point, this level right here, which is the level of previous level of support becomes previous level of resistance becomes support. So I think we're going to test that level somewhere over here on all the major moving averages and eventually break it and start to head lower, possibly back towards the lows we've seen in 2020 eventually. All right, folks. So that's all I have to add. Again, nothing much has changed as far as this bear cycle. We are still in the bear market cycle, folks. Even with the strong rally that we've seen in June, only back up to a level of resistance before we started to reverse. And that reversal has been well pronounced, as you can see here. Big time reversal right at a level of resistance. All right, folks, until next video, it's Tim Davis here signing off. Enjoy the rest of your weekend, and I will see you guys next week.